All right. Hey, everybody. Good evening. It's Doc Severson here with Ready, Set, Trade. This is what we call our 10X Tribe coaching session on Tuesday nights. Coming to you, this is Tuesday, the 11th of May. So whether or not you're with us live here tonight, welcome aboard. Or if you're just watching this on a replay, hope you're getting some value out of this. And let me know if you have any questions after tonight's session. All right, so without further ado, let's get into today's presentation. And this was really precipitated because of our little sell-off the last couple of days. So the NASDAQ is down about 7% and is pulling everything down. And this market, because we're getting some interest rate fears, again, the same kind of deal that we've seen. Hey, Rob, welcome to tonight's session. So what I thought I'd go over tonight, I'm going to hide down here in the left-hand corner. Hopefully I won't get in the way. We're going to be talking about 7 ways to spot the top. This is almost an impossible task. It really is. As long as I've been doing this, I have not found this to be any easier. I've gotten better at spotting the bottom on a correction or a crash, things like that. That to me is an order of magnitude easier than spotting the top. Spotting the top is very, very difficult to play. So not only if you're a bull and if you're trying to manage risk and to get out of positions, or if you're a wannabe bear and you want to ride the downside. It's awfully tempting. You look at that and you say, wow, I can get rich in a hurry. But let me warn you, you got to be in it to win it. You can't join that ski jump on the way down. You can't see it going and then all of a sudden say, hey, I'd like to get on board. You're too late. You are already too late if it's already started without you. You got to be in it to win it. So I'm not much of a bear. We spend 99.9% of our time moving to the upside, so I'm not really willing to fight that. But what we can do is manage risk and get more conservative as we start to get into these well-defined signals that we have. So 7 ways to spot the top. Here we go. Probably we'll be here for the next, I don't know, maybe 25, 30 minutes or so. This is not an overly long topic. Depends on your comments. Hey, Edgar, welcome aboard. So like I said, it's incredibly difficult to spot the top. Chances are you're going to be early or you're going to be late. There's really no other way. The top will break so quickly that for most people, you're going to be late. Or you can start now, you can be early, and you have to be willing to put up with the pain of being early. Just the fact that you're more aware of what's going on than 99.9% of other retail traders means that you're more likely to do a better job at managing risk and possibly even catching the turn. Most other retail traders either have no idea what they're doing at all, or are following Wall Street bets, so they're just following the crowd like a bunch of fish, and so they're going to all go in together. Being able to think independently is incredibly important for your own survival as a retail trader. With each major correction or bear, and these days it's difficult to tell the difference between the two. We just had a crash last year that was good for what, 35%? But it bottomed out in 3 weeks and it was over. That's not what bear markets have traditionally been. Bear markets have traditionally taken about 18 months to go through the cycle. And they're just horrible to go through because they seem like they're never going to end. And every rally seems to get sold into. And it really wrings everybody out. But honestly, we haven't had one of those in a long, long time. And so we're getting these hyper corrections, I guess is the only way to put it. These do leave some common signatures or tracks behind. And that's what we're going to talk about today. So the first one that I want to talk about with you guys is the change in market character. What on earth is market character? Okay, let's get into this. Near the end of a bull move and into the transition to a bear or corrective, the movement in price becomes much more unstable, becomes much more volatile. You can see this here. Notice how this rally, everything makes sense. It's dipping and rallying and dipping and rallying and pullbacks and rallies and pullbacks, range contraction, range expansion. And everything's all nice and neat and tidy, and everything makes sense until it gets to the ending move here, and all of a sudden everything gets thrown out the window. This is the change in character. So not only on the way up, but also, of course, on the way down. Notice how this section here looks completely different from anything before it. Way different. Okay, so this is a change in character. So this one was the end of 2017 into the beginning of 2018, if you want to take a look at that. Here's another example of a change in character. Okay, quiet and trending. Pullback, quiet, little tiny candlesticks, and everything's all very quiet. Little pullback, but that still brings into a higher high, and all of a sudden, everything starts to change. And this one changed in a hurry, and this is the beginning of 2020. This is a massive character change. That is a huge tell. When the character changes, the ATR goes up, the size of each daily candle goes way up, you're going to start to see very, very different things. Welcome aboard. If you're just joining us here tonight, we're going over the 7 steps to identify potential market top. I am your host, Doc Severson. All right, so another one here, nice and quiet, super quiet pullback, quiet, everything working well. And all of a sudden, and I remember this one was particularly difficult because if you compare everything back here, it's all super quiet. And then all of a sudden, wham, 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 all of a sudden gets very, very volatile, huge transition to a different type of character. Massive transition to a different type of character. Usually you get what I call a shot over the bow. You guys familiar with what a shot over the bow means? Used to be in the old navies when we had the big masted ships and they would shoot cannons at each other. A warning shot, they would fire one over the bow to say, cease and desist, you better stand down or we will fire on you in anger. And that's sort of what happens when markets start to change and transition. You could even say that this was the first shot over the bow. Back here in February of 2007, in this case, because what this did was sort of wind up the market. It started to change right after this. But then a very quick move down here in the summer, and an equally quick move back up again. And this is actually when the Fed started to get involved and said, hey, we might even just, start dropping rates. It was already over by then. But that transition is something that, you're not going to get this overnight. This is something where you start to look at markets and see how they really move, and you'll start to identify this. Okay, so a change in character. Watch from this change in character to quiet and trending's typical quiet, linear bull market to sideways and volatile. All of a sudden, everything starts to become unstable. And maybe that's what we're seeing right now. Now we want to get into the S-curve. I love these. You just see them everywhere. Okay, so market moves will typically trace out an S-shaped curve, leading to an almost vertical finish. I see these things everywhere. We come strong off the bottom, so this typically starts from some kind of corrective action. And then the market rips off the bottom and then gets sideways. Range expansion goes to range contraction in here. And then eventually goes out to an almost nearly vertical high, an infinite slope. As everybody's chasing after this, this is the old FOMO, right? So the big F here, the big FOMO, fear of missing out. The bears are getting baked. They're backing up, covering their shorts. It's the end of every market rally looks exactly like this. So it's usually a panic event that causes the genesis of the move, eventually rallying into consolidation in the middle, and then a runaway finish. So here's an example of 3 of them here that I've traced out with the red line. So you can see each one of them sort of, it's a kind of a backwards S, right? But it ends up offering this nice parabolic finish, almost a completely vertical finish. And I've got a question mark up here because that's where we are today. We're getting close. We are getting very, very close. And this is why this topic is so appropriate for today's market. Welcome aboard, folks. Glad you could make it tonight here on a Tuesday. Sentiment is very negative at the bottom, very skeptical near the middle, and totally euphoric at the top. Remember this, very, very negative down here. So down at these levels, you're going to hear nothing but bad news, bad news, bad news. Bad news, bad news, bad news, right? So think about last March, 2020. The news was awful, wasn't it? It was just like every day you just didn't even want to turn it on because it was just, and I remember my wife was working from home at the time, as was I. And she's sitting there looking at the TV, and the TV has one of these great big, Dow tickers on it because she was just watching the news, and they tend to focus on the Dow. And it was down like 900 or 1,000 points. And she's like, oh, what is going to happen? This is terrible. I'm like, don't even watch that stuff. And it takes a long time. This is not something that comes immediately. It takes a long time to be able to filter that out. This is what I say to everybody, is you have to learn to think differently about risk when you trade the markets. This is the point of maximum opportunity. But it rarely reaches up and taps you on the shoulder and says, oh, by the way, you may want to be going long here. That's not what we're talking about, though. So we have very negative down here, and it's disbelief. We'll get into this in a second, but it's very skeptical near the middle. Everybody's like, oh, that's it. We're done. And then all of a sudden, from this skepticism, the market climbs the wall of worry into the final finish. It eventually shifts over to euphoria, and then it's all over. Okay, now I'm going to provide a little structure to that S-shaped curve, the 4 stages to a market rally. These will always repeat. So if we start out here, we're going to start out with some type of sell-off, and we had a little 20% mini bear market at the end of 2018. And it bottomed out on Christmas Eve. Like, wow, this is really, come on, really? Bottomed out at Christmas Eve. This is called disgust. I remember going long on that day because I got a signal. Like, oh boy. Still in Gresham, Michigan. Nice. You can leave. You're not a prisoner. So we start out with disgust. This is where people can't even open up their portfolio. Their statement comes in the mail. They're like, I don't want to look at it. Don't want to look at it. Or people just give up. People just give up and say, I can't do this anymore. Or they sell out their portfolios. I might as well sell out and save what's left. Typically, this is what they do at the very bottom. Well, disgust gives way always to disbelief. Nobody can believe that it's rallying. In fact, most knowledgeable traders are saying, well, that's a sucker's rally. I'm not going to buy that. It's a sucker's rally. It's just going to fall down again. So the majority opinion, the conventional wisdom, is that it's disbelief. GR, is that Grand Rapids maybe? I've been downtown Grand Rapids. That's really pretty. So disbelief is the second phase here. And then this gives way to acceptance. Finally, people say, they nod and they say, you know what? Market is going higher now. It is going higher. It's a primary bull market again. And by this time, everybody's figured it out. Everybody's figured it out. Okay. And that's what acceptance phase is. However, there's still a fair amount of skepticism, which really is what drives the last section here into euphoria. And then once everybody's on board, guess what? You run out of buyers, and then you run into disgust again, and then it just goes into disbelief, acceptance, and euphoria. The cycles go over and over and over again. And I'm telling you guys, if you just memorize this little thing here, and I did this, it was what, 20 years ago, I figured this out, or I learned this off of somebody else. And it is hugely important because you've got to be able to sort through these emotions. You can't be swayed by the mainstream media. If you're going to do the same thing as everybody else, you're going to have the same returns as everybody else. You have to be able to think independently. You have to be able to think through the fog of war, especially during these times, euphoria and disgust. This is the point of maximum opportunity, and this is the point of maximum risk. These sentiment patterns repeat continually and are seen at every time frame. I can even see them intraday happening, playing out in little miniature S-curves. It's the same thing. Now we're going to get into price polarity. Price polarity. Rule number 2 of fractal energy is reversals start from the inside out and they propagate higher. That's a schnauzer, sorry. So learn to spot price reversals. Here's an example of a price reversal on, this is the daily chart. So what we have here is just a standard, higher highs, higher lows, Dow theory, higher highs, higher lows, higher highs. And then all of a sudden, what happens here? We print a lower low. We go from a higher high to a lower low, lower high, lower low. So this is how it plays out. We go from a higher high to lower low, lower high. And then this is actually where the reversal is confirmed at this point. Although, if you look at this, the very fact that you went from a higher high to a lower low does increase the probability that any high from here is going to be a lower high. So if you have any experience, you're going to look for that lower high and sell into that, or be prepared to close out your long inventory. That's your warning shot over the bow. And then there's the confirmation as it confirms with a new lower low below the previous lower low. And that turns it into a change in polarity to a downtrend. Now this one, ultimately, this little swing here was just a weekly corrective. And we'll get into this in just a second here. So this is not the very top of a bull market. This is just a little corrective move, but you can start to practice on these little ones. These get even more powerful when you combine them with fractal time frames. And this is where we get into fractal price movement. And when I say fractal price movement, this is where we're talking about different time frames. It's almost a family of time frames that are separated by a factor of 5. I'm going to go to a 3-pane chart here and show how we can see a reversal propagate upwards in time frame. Okay, so what we have here, and this is, oh, by the way, the 2007 to 2008 reversals. This is a great example that you can study for price action reversals. So rule number 1 is that larger time frames dominate the trend, and we had this huge trend and swing to the upside into 2007. But if we go down to the daily chart over here on the right-hand side, so this is the monthly, weekly, and daily chart. This is the same top here, but notice what's happening. From this higher high, we print a lower high and a lower low. The first reversal happens right there. This is the very first reversal into a downtrend. It happens right there. And it's at the end of 2007. And if you remember anything about that, if you had been able to avoid all of the rest of the next year, you would have done yourself a huge favor. That's the very first signal that things are falling apart. Now what happened is, this was a reversal on the daily chart. So what happens is the weekly chart gets into it as well too. The weekly chart starts to reverse at this point. Now we have a weekly downtrend. And actually, we have a monthly downtrend, which comes along at around the May timeframe of 2008. So it starts off as a daily reversal to a change in polarity to the downtrend. That happens in December of 2007. The weekly chart comes along a couple of months later and confirms that. The reversal actually propagates up to the weekly chart. And then eventually it propagates a couple of months later into the monthly chart as a downtrend. And so you know that things are not doing well here by about the May timeframe of 2008. It's time to get out. You still had a couple of months left before the ship really, most bear markets, the worst selling really occurs at the end. Doesn't matter whether it's a bear market or a correction, the worst selling always happens at the end. This is the capitulation point. But that's how to use different time frames to tie them together to understand the puzzle pieces. How does all this different time frames, how do they match together and allow you to understand what's going on? Now we're going to do the same thing with trend exhaustion here. Trend exhaustion is something that we need to be really aware of because we can see trend exhaustion happening here. And if you understand anything about fractal energy trading, I'm using the CHOP index down here, fractal energy study. And you can almost use this as a fuel gauge, right? So full, empty, and we need to be aware of those times where we're empty. Well, guess what? We're down here, we're running on fumes on the monthly chart. This is the monthly chart over here. There's a high danger, high liability that look what happens when we run into this level of exhaustion on the monthly chart. We get into stuff like this. We get into stuff like, even with this at the beginning of 2020, we get into moves like this. So be aware of this. This is hugely important right now that we're running into this, what I call a musical chairs market, where as long as the music's playing, everything's working okay. But trust me on this, when the music stops playing, there will be no chairs. You will not find a place to sit. And we got a taste of this last year when we dropped 35% in 3 weeks with very little warning. Notice how fast that this worked. Back in 2007, 2008, this took a year and a half to fully play out. It started in 2007 and it took about a year and a half to fully play out. This took 3 weeks to play out. Markets are getting much more vertical. They're getting much more rapid. We had this move at the end of 2018. That was 20%. Happened in just a few weeks. This one happened in 3 weeks. What do you expect this one to be? We're going to get another move at some point here. I'm not a bear. I'm not a bear. I just want you to be aware of how the market's moving right now. So I see people all the time that are 100% bearish every day, all the time. And it's usually folks that come from Chicago. It's usually folks that grow up in the Chicago pits. And I don't know what it is in the water there, but they are trained. They're indoctrinated to be bearish because that's a huge edge for them, because typically they're trading against the retail trader who panics. And so this is when they can make a tremendous amount of money, is when retail panics. But as a retail trader out here, if we're not in the pits, then we're dealing with bullish price action 99% of the time, right? Or maybe a little bit less than that. Seems like it though. That we need to be going with where the trend is. But we have got to understand what our risks are. And right now we're starting to get into the risk where we have very low energy at the monthly chart. We're near a top, or at least we're near a low energy condition in the weekly chart. And guess what? The daily chart's running around like a 2-year-old that just woke up from a nap, wants to go somewhere. So if parent time frames are exhausted, we're going to see that rip to the downside first. Now, what I'm still expecting, and this is just my opinion, but I'm still expecting one unbelievable rip to the upside. That will stick a fork in this. That will get everybody off the couch and everybody into their Robinhood accounts and their Webull accounts, and Wall Street Bets will finally get, GameStop up over $1,000 a share or something like that. And everybody's going to be partying. And then all of a sudden the trapdoor opens up. That's when you want to be really careful. And this is why I just wrote a program, or a course that's on our program now, which is called Crash Proof Your Portfolio. So interesting topics in there on using volatility instruments or portfolio substitution, things like that. Okay. So if you're an elite member, make sure you check that out. Okay, so daily exhaustion is good for about a week's pause. If we have weekly exhaustion, we're probably going to correct for about a month. If you're just joining us, welcome aboard. We're going to be finishing up here, but you're welcome to go replay through this. Watch it in double speed, whatever you want to do. Monthly exhaustion, this is where we run into the end of the rally. And we may correct for a number of weeks or even months before the trend resumes. Now I want to get into my last step here, which is percentage of S&P members above the 200-day moving average. Somebody was asking me about divergences today, like what divergences do I use? And this is one of them. I think this is one that's very powerful. So out of the S&P 500 with about 500 members, what percent are above or below their respective 200-day moving average? And a 200-day moving average is a simple old school filter that implies an uptrend. If the price is above a 200-day moving average, that implies an uptrend. So it's very common to see some very strong mega cap stocks lead everything higher. So this is where we get Facebook and Apple and Amazon and Microsoft and Netflix and Google driving the rest of the market because they're worth about 25% of the S&P. So we've had this condition for years now, where we've had these big tech stocks, these big cap stocks, and they've even got an S&P sector now for themselves, which is communications. Where the market is vulnerable, now I'll show you this in a second here, is when you see fewer and fewer and fewer, when you see the S&P coasting up on fewer advancers. It's almost like somebody on a skateboard going to the top of one of those ramps. At some point, they're going to hit the apogee and start coming back down again. This is where we have the market very top heavy and ready for a break. Very dangerous condition. This is on stockcharts.com. Here's the ticker, $SPXA200R. You can get to it tonight. It's free. And I'm showing a monthly chart here, or I'm sorry, weekly. This is a weekly aggregation. And what we want to be careful of is when we have the price hitting new highs, as it was at the beginning of 2020, the price was hitting new highs, but we had fewer S&P members above their 200-day moving average. And we had the crash very soon after that. Obviously, the crash didn't happen because some stockcharts.com study was showing divergence. That's not the way it works. The crash happened because the market was very, very susceptible to a negative catalyst. And that's what you have to watch out for. When the market is very susceptible, it's sitting there like Humpty Dumpty, sitting there up on the wall with a big target on him. Shoot me. Those are the times where we have to be very, very cautious. And it would be wise to thin out at that point. Now, where are we sitting right now? We've come down a little bit off here. This has been a very, very high value. This recent rally up to the new highs has come on super participation, much higher than some of these other figures that we've had in the past. So we've had just a huge number or a huge percentage of the S&P member stocks above their 200-day moving average. We haven't seen divergence yet. So what we want to see is from whatever corrective pattern that we're in the last couple of days, we want to see this drive into new highs, and we want to look for divergence, especially on the weekly chart. And when that happens, that's yet another, what's that game with the camel and the sticks and all that stuff, right? Forget the name of that thing. So this is one very important one. So learn how to use this. Okay, those are my 7. Those are my 7 steps. If you put all those together, again, there's no guarantee you're going to spot the exact top of the bull market, but you're going to be aware of conditions that are going to be, shall we say, less than desirable. You're going to be much more aware of conditions where you're going to see much more of a liability towards something like that. Is the fractal oscillator that I'm using proprietary? No, it's not. It's called the choppiness index. However, not all the platforms have it. So you can get it in TradingView. TradingView has it stock. Last time I checked, TradeStation did not have it. I used to use that on TradeStation, and I have custom code for this on Thinkorswim, which is a very easy download. So if you need something like that, please contact me on the platform. Please contact me on the platform. And the best way to contact me is really to join our free 10X tribe. So I'm sure most of you are either on this, you're either elite customers, or you're just on the 10X tribe, which gets you a pretty fair amount of information as well as these as well too. So if you're just joining me from YouTube, go ahead and join our 10X tribe for free. And then you're on the same platform. You've got a chat window. You've got other people that you can interact with, plus a bunch of free courses as well. Shambu, is this recorded? Yeah, this is called YouTube Live. So this YouTube link, you can actually grab the YouTube link over. In fact, let me do this here. This is going to be weird because I'm going to be looking at myself here. But you can take this thing and you can back it up right now, right? You could start to watch something from, several minutes ago. So that's the great thing about this YouTube technology, is that you can also run it at double speed if you're in a hurry too. So, okay. Anybody have any other questions? Otherwise, thank you very much for taking time out of your schedule on a Tuesday night. Hope you find these useful. If there's any other topics that you want to suggest, or would you like to see me put together, I'd be happy to do that. And we will also have another one of these Thursday night for our elite folks, our elite members. Okay, any other questions? Otherwise, you guys have a great Tuesday night. Please reach out to me if you have any questions or comments or requests or anything like that. Okay? Thanks, everybody. You guys take care. Be good. Have a good night.